All right. So I think people are probably still filing in, but quick call out as we start this off. I know that the picture on the advertisement is a little bit different. Joe Suliman actually has COVID right now and is unable to make it to this. And so Warren and myself, I'm Sean Hall. I'm an associate director here. We're going to be running this in place of Joe. So welcome everybody. Excited to kick this off and run through things. I can give a quick kind of a 30-second introduction on myself. I do a lot of crypto work here at the firm as well. In addition to Joe, I'd say that Joe probably focuses more on the consumer side, whereas my team down here in Florida does a lot of our B2B search work here at Daversa. I've been here about 6 years, a little over 6 years at this point. Like I said, we've always been a B2B focused team, but now I'd say in the past 2.5 years or so, at least professionally speaking, we've been focused a lot more on our crypto sector. Personally, outside of Daversa, I think I've probably been involved with crypto for at least 5.5 years. So I wouldn't say I'm necessarily like a super early adopter, but I got in early enough to be able to, to kind of fall in love with the space. And so now that's bled into my career as well. And so what we're going to do today is touch on a bunch of different topics. We're going to go through, obviously, the rapidly expanding Web3 ecosystem. I want to talk through essentially what we're seeing from a talent perspective, compensation, equity and tokens, kind of all that interesting stuff. And then we're going to reserve the last 15 minutes or so for kind of just a general Q&A section to go over things. So Warren, I want to hand over to you quickly to kind of give a quick debrief on your background, and then we can jump into some of the stuff that everybody actually came here for in the crypto world.
Awesome, thanks, Sean. And first and foremost, thank you to Daversa Partners and Hunt Scanlon for having us today. My name is Warren Lorenz, founder and managing partner here at TechMeetsTrader. TechMeetsTrader, we have 3 different business units, all surrounded within the blockchain Web3 crypto world, if you will. We started a business in 2015 and didn't necessarily transition full-time until 2017 into crypto, if you will. But we started with consulting as our primary focus, which allowed us to work with, exchanges and hedge funds and NFT projects, launch DAOs, do white papers, token launches, kind of the gambit through that experience. And over the years, that allowed us to kind of transition into our kind of core focus today. And that's our family of funds. We have 2 funds. We have a venture fund and a market neutral arbitrage and lending hedge fund. That's where, as a business, we're really kind of scaling, and but nonetheless, we've kind of been in throughout the industry and touched on it all. So I'm excited to talk with you, Sean, about everything. As everything is in the crypto space extremely volatile right now, and it's been an interesting past couple of days.
Yeah, totally. And it's a good segue, Warren. We have an agenda that we want to go through, but I feel like we have to talk through the last few days with all the volatility, not just in the crypto space, but on a broader traditional financial perspective as well. So I'm really curious, just from my own volition, what's your take on the past few days? What's going on? I know we saw some stable coins get depegged. Obviously, we've seen some huge price fluctuations. And so, what's your perspective on it over
Yeah, it's as you said, it's been a volatile last few days here in crypto, and we're really starting to see. Personally, in my opinion, what will be remembered as a very historic event for the industry. A top 10 stable coin, and for those who are in the audience and perhaps don't have any presumption of this space, stable coins are, if you go to the US, if you go to your bank and you go to withdraw dollars, that dollar should be worth 1, right? It's the denominator of most quoting currencies. A dollar is worth 1. Well, a stable coin is typically an asset that is, priced at 1 and is pegged at 1 so that people can efficiently transact within the crypto ecosystem. And really what's unfolded over the last 72 hours that's caused this kind of systemic risk that we're seeing and sell-off and whatnot is traditional firms and financial firms, hedge funds, trading firms, had a consortium that had a targeted attack on a specific stable coin. this asset was trading, let's call it at $1, and a lot of people had this in their savings. It was a $20 billion market cap stablecoin, and it had another asset that worked alongside it, which was also in terms of par value around the same market cap. So in total, around $40 billion nearly wiped out over the last, let's call it 3 days within this one targeted attack coming into this ecosystem. Now, this is kind of one of the first large scale instances in the industry, if you will, of traditional hedge funds, who are typically within their own domicile coming into the industry and not trying to take a approach of let's build together and be constructive, as opposed to the alternative, which is more so destructive. Right. And so the aftermath is kind of what you're seeing is systemic selling. That's caused, liquidations in terms of the DeFi markets. DeFi stands for decentralized finance, for those who are unaware. And in that, ecosystem, it's very common for you to take assets such as stable coins or Bitcoin or Ethereum, and it's called collateralizing it. You deposit it into some smart contract, and you can borrow against that. So if you have $1 million worth of Bitcoin and you said, hey, I need like $200,000, you could go in, deposit your Bitcoin, pull out $200,000. You have an 80% health ratio on that loan, and you're barely well protected. Now, when stablecoins depeg in this nature, obviously that collateral starts being liquidated and cascading through the entire industry. So what you're seeing here is this entire kind of risk-off systemic sale coming from this one specific targeted attack. And that's kind of where my head's been with the market neutral arbitrage and lending fund that we have here at TechMeetsTrader, because of course, as market makers and arbitrageurs, it's our responsibility to help step in and make markets and do that to the best of our ability. So it's been a wild day at the trading desk for the last 3 days, if you will. I'm
sure. And I know that, a lot of people were kind of propping up Bitcoin as a hedge against inflation, and this has kind of thrown that for a loop as well. And so I think, I guess one thing quickly, because we do want to have this and tie this back into some Q&As. If you do have any questions through this to the broader group, there's a Q&A section on the bottom right next to the raise hand button. And so please feel free to chime in, and we'll get to those in the end. But to your point, Warren, I think from where we stand right at Daversa, obviously the way that we evaluate companies is based on their talent, right? And I'm not a super technical guy. I like to think that I'm up to date on the crypto space, but the way that I really can tell if a company is doing well or is set up for success is based on talent evaluation. And so now that we're seeing so much volatility across the space, not just in the crypto world, but also within traditional finance as well, what we're seeing is not just price volatility, but actually candidate volatility as well. And so really it's a good thing, as this space matures and as these companies go through their ups and downs, we're able to, to get access to more candidates now that they're thinking about what might be next. And so I think taking it a step forward, I'm super curious in terms of your situation and your perspective as a market maker. What kinds of newer technologies are you looking at? I know obviously we've, been in sort of this, this Web 2.5 / Web 3 sort of filler space right now. And there's obviously the huge payments landscape as well. But now that that's getting crushed, are there any sort of newer technologies or areas and segments that you guys are excited about over there at TechMeetsTrader?
Definitely. And I would kind of zoom out of the arbitrage and lending fund and go more towards the venture side and kind of what we've seen across the broader market in terms of, opportunity and excitement. And,
right.
We were very early supporters of industry called play to earn. We were seed investors into a company that coined the name, but didn't even exist, at the time. The concept of playing NFT games in order to make capital was there, but it wasn't coined play to earn or anything like that back in 2018, 2019, when we first started getting into that space. And so as that space has started to evolve, we're seeing some really, really interesting partnerships come in from the play to earn side from traditional firms, such as let's call it audio and record label firms. You have historic animation firms that have done video games and kids
Activision
TV
is
shows,
doing it. Yeah, totally.
right, and things of that nature, and so it's very, very exciting, I think, from an innovation perspective to actually, because you look at the millennial generation, which is kind of a core demographic within this crypto sphere in terms of the users, right? And the time with COVID and spending behind screens and that's kind of pushing back into that video game system has been a hugely attractive industry. Outside of that, I think is extraordinarily interesting is what we're seeing from the tracking of on-chain tools and the overall blockchain ecosystem tooling. There's tools that are commonplace now, but when we first got going, really, it wasn't commonplace to integrate like a chain analysis in terms of transaction monitoring, right? And there's other transaction monitoring softwares too, but that one's kind of the most well-known name, within the industry. And that's, protected hundreds of people from malicious attacks, or projects rather from malicious attacks, collaborated across different jurisdictions and governments. And so when I start looking at all of the touch points within, not just the crypto ecosystem, but the real world, I think those types of innovations that are within the industry that are kind of showing that we want to operate responsibly, within reasonable regulatory environments, those types of things are very exciting. And then, of course, it would be irresponsible to overlook the DeFi component, right? The decentralized finance wave that we're seeing. With the market volatility in this one instance with this one stable coin, it's, I think, a good snapshot of obviously the risks and what can happen. But nonetheless, as a whole, the ecosystem remains solvent, healthy, and moving forward. And when you start looking at the innovations between not just the financial products, between perpetual future contracts, which isn't traditional in nature, and you start looking at like financial NFTs, like vesting, staking NFTs, and ways as people and DAOs are receiving financial NFTs as compensation. And we're going to get to that in the future, in this conversation. So I hate to foreshadow too much, but I think those types of toolings, the voting in terms of governance structures and all the above, really make me excited about kind of the longevity of this space, right? Because we see on the institutional aspect that the access to capital coming into the ecosystem is ever present, right? Capital is cheap within this world at this time relative to other markets, right? And so like that's just fueling perpetual building and growth and innovation. And sometimes you're going to have instances like you're seeing over the last 3 days where people come in and try to break things. Things are going to break. That's if you're trying to innovate and things haven't broken once along the way, you're probably not doing a good job of pushing yourself, And so like it's all a due course, but nonetheless, it's all very exciting from that perspective.
I agree, and I'm glad that you mentioned some of the things outside of the financial landscape too, because I think what we're seeing across our client spectrum is kind of this decoupling in crypto. That's, yes, you have your payments companies, and yes, you have your DeFi companies and TradFi companies, but you also got companies that are focused on experiences, right? Like ticketing NFT applications, and then you've got companies that are focused on cloud storage, and like where we're seeing, I'd say, a majority of our actual work, and like we're working with great companies like Chainalysis that you mentioned, and Gemini and OpenSea, but we're also working with the startup layer too, that are the earlier stage cloud storage companies, right? In the earlier stage, more like developer focused and developer tool focused companies. And so I think that this decoupling away from crypto in the context of finance is really interesting, and we're seeing a ton of development across the spectrum where people are applying blockchain technology, or essentially just any sort of developer focused technology that's using, whether it's Ethereum or Solana, or Avalanche, where we just did a bunch of search work as well. That's out of the A16Z portfolio with Chris Dixon. Is this focus on this next generation of development and application use cases, as opposed to just trying to reinvent the exchange landscape, where Coinbase has seen so much success and Binance has seen so much success. And so you mentioned something else too that I wanted to probe on a little bit in terms of capital being cheap right now. And so I think one of the things that we've seen that's been really interesting and also kind of difficult to wrap our heads around, just from a candidate compensation standpoint, as well as a company funding standpoint, is like, how are these companies going about actually raising, these funds? How are they getting financed? Where are they finding, these investors, and how is the process that you guys are seeing? How's that playing out?
Yeah, and I think even before we go specific into the mechanics of the deal, if you will, on the financing side, it might make sense to take a step back and talk about the two different types of structures as a whole from a corporate structuring perspective that kind of have two different divergent paths. As you kind of alluded to, there's kind of the centralized based entities that are very commonplace, the Grayscales, the Bitwise, the Coinbase, the OpenSeas, right? Household names that, but more or less are within a specific centralized organization, right? Those compensation structures differ rather drastically than what we're seeing in more of the decentralized organization structures, the DAOs, if you will. And so I think maybe we'll definitely touch on both, but let's touch on the more traditional side first, and then transition into the more exotic, decentralized, autonomous organization. So in regards to the overall funding mechanisms for traditional firms, it's definitely early stage equity rounds, the venture capital funded growth early on, right, that we've seen historically. That is where new talent that's coming in is sometimes getting restricted stock units, but more commonplace what we're starting to see with those types of equity vesting agreements is a warrant, if you will, and by nature. Right. And so that's not to say, hey, we have a token that's listed, but in the instance of like a Ethereum name service, right, that has a huge centralized component, but then wanted to, obviously airdrop to their communities and things like that. In the future, if there were to become a token, these new talent, hires are taking warrants on a potential token at a certain percentage of supply. Because tokenomics, haven't kind of come out at that point. And so you're going to start looking at, it'd be hard to say you're going to get 10,000 tokens at, $10, if you will, when you don't know if there ever even will be a token, right? And so that's kind of a slight change in the traditional venture structure that we're seeing, at least from the early stage deals. Now, in the later stage deals, as you start getting closer to the Series B, the mezzanine round, IPO or SPAC route, whatever it may be, in terms of your public offering or exit or whatever that entails, is there's been a lot of SPACs that have been coming into the market to acquire these types of companies and kind of replace management. Because you can take it from zero to, in some instances, you may be taking it from 0 to 500 million in revenue within a short period of time, 3 or 4 years, right? But as they start wanting to underwrite, hey, we have this token ecosystem that's going on, which typically is segregated, right? In some instances that are now coming in public via SPAC, there's the token component, there's the equity component, then you're looking at, right? And then you're looking at the balance sheet component, right? And so there's like a lot to digest. And so from a talent perspective, it's up until that point, it's very, a lot is negotiated, right? Between restricted stock units, cashless compensation, as well as, a warrant-like structure. I think that differs from the decentralized component, the DAO component, if you will, where there really isn't a centralized entity, a corporate structure that's typically responsible for the collective as a group.
Right.
And so hiring in that type of environment is extremely difficult, because a lot of DAOs will come up and launch and be like, hey, we're just going to recruit talent within the organization. But ones that are larger, for example, like a Sushi, right, that recently had, some tumultuous times, but nonetheless is still weathered through with their core management team. Nonetheless, they have, huge treasuries, ability to navigate. And so those types of folks are recruiting really impact players, right, to kind of bootstrap and grow to that next level. Yeah. And so what does that look like from a compensation perspective when you've already launched? There's a fair market value and the like, right? That's different than if you're doing pre-launch. Pre-launch is typically very similar to if you're getting into an early stage venture in the traditional structure, where instead of equity, though, for these types of decentralized autonomous organizations, it's a governance token. So these these entities, the way that they operate is through typically two assets. One that's an asset within the ecosystem that's used within whatever product or service that may be delivered. And then the second component is like a voting asset that's utilized for the collective as a whole to kind of coordinate specific initiatives on behalf of the organization. And so when you're getting obviously rights in the governance of that entity by receiving that as a form of compensation. And then of course, down the line, as you've launched and you have to retain key employees as well. One of the key issues with some of these types of structures is they've done very, very well. Their assets become liquid, and then you have individuals who have perhaps 5 to 10x their personal net worth, and then perhaps some of their desires as individuals to keep innovating and build forward slightly changes with their change in life, if you will. So you're starting to see those types of individuals become very successful and then fade out. And then obviously the ones who are ultra successful, but then just that is not a core motivator for them. There's not an end game and they're just powering forward and developing. I think the perfect example for that is, Sam Bankman-Fried at FTX, right, is one of those individuals who doesn't need to show up to work. I mean, he's, I think, one of the top 10 now most wealthiest individuals, right, in the world. But nonetheless, that guy is sleeping in beanbag chairs in the office, right? He's just built different. And so, from a compensation perspective, from an early stage, you're looking at governance and then, perhaps vesting in the ecosystem token as well. Cash's compensation is very difficult because typically the cash that's being utilized early on is for the treasury-like services. So it's for, bootstrapping liquidity pools. A lot of marketing and expense goes into, user acquisition from that perspective. And then obviously development and legal. Right. What remains, of course, is obviously, like any organization, tough, but the difference is a lot of these platforms don't have sustainable revenue drivers to keep giving that spigot. So cash is the ultimate commodity where, tokens and the like are cheap.
I think you could even break it down even further. I think liquidity is the ultimate commodity because we spent a lot of time on this just in negotiating, offers with candidates, right? And obviously your base and your bonus are important in your salary. But the difference that we're seeing when we're negotiating a token compensation package in comparison to an equity or a stock option plan is that you're liquid immediately, unless you're pre-launch, of course, which you mentioned. But the utility that you get from that token plan is actually much more viable immediately than your stock option plan. You're not liable to go and actually purchase those options once your 4-year vesting schedule is up, right? You're able to essentially just receive those tokens, and then the secondary market already exists for it, but it's being treated like the public markets are treating public companies. And so your token, based on your direct impact, if you're, a CMO, which, for instance, we just did a CMO search for a company called Vela Labs, which was founded by Mike Kennedy, the founder of Zelle. He moved into focusing on cross-border payments. We brought on a CMO for him, this guy, Mark Fisher, who came out of PayPal. So knew the payment space, didn't necessarily know the crypto space as well, but his tokens were immediately liquid, right? And he's got kids that, are going to college. And yeah, he wants to go for that long-term equity, which he will, right? And because he was able to, I think, look at the tokens in terms of their immediate value, as opposed to the potential stock options down the line for a 25-person company, that was able to give him some peace of mind to jump into something early stage like this. And so that utility piece and that liquidity piece, I think, is what we found to be most important in negotiating these offers with these candidates who, in more instances than one, because this market is so crazy right now, from a candidate standpoint, it's been really helpful because most candidates, if they are active, if they are looking for a role, they've got 2 or 3 or 4, even 4 different offers in hand if they're a strong candidate. And you need to be able to make sure that you can really paint the picture around what's this long-term value look like for you, and also how are you hedging your risk.
Right.
And I think
that,
go ahead.
Sorry, I didn't mean to interrupt you,
but
I was
go
going to say that aligns very well with what I'm seeing in terms of kind of value-driven personas, right? In the matching of the true like value systems, your internal value systems of as you as a core. What do you believe? Like, there's a huge audience of folks that are very passionate about having a decentralized store of value, and they call it Bitcoin, right? And so like that's a huge value system for many. So then on those tenets, then they start working kind of tangentially, right? And so I think it's a matching of the values, knowing that it's going to likely be an uncertain ride. And for some types of companies, tokens is the primary form of compensation for work efforts, right? And that is a huge, shift, at least from what I'm seeing. Now, what are you seeing from that perspective? Are you seeing still, obviously, I would expect the majority clientele to be centralized, but have you yet to start to see any of that decentralized clientele yet?
Yeah. So two things. I know that there's a bunch of companies that are implementing sort of a hybrid model around how they're compensating, employees, whether it's both equity and tokens, or if they're just straight up paying employees, in Bitcoin. I know Kraken pays about 80% of their paycheck in Bitcoin. I know BitPay, which is down in Atlanta, also does that. And that's more of like a Shopify for crypto on the e-commerce side. But then, yeah, in terms of the decentralized aspect, there are a bunch of companies that we're seeing that are I think pushing to go as decentralized as possible while still retaining as much of their ownership and voting rights as they can, because the hard part is really deciding, what your board makeup is. And if you've got an entirely, decentralized autonomous organization, which everyone is calling a DAO for context, it really can become pretty difficult to make important business decisions when the voters are really made up of just, the entire community, right? So a lot of companies are kind of pushing a hybrid model for that right now, if they're really focused on, long-term profitability. And then the second thing is, there are some companies that I think are focused on shifting more decentralized over time, right? And they're starting off to get off the ground in terms of, the initial funding, and they're going through the token drops and they're raising from the community, but they're retaining their board. Like we did a CEO search for a company called Storage Labs. We brought in Ben Golub, who's the CEO of Docker. He stepped in, and if anybody watches Silicon Valley on HBO or watched, Storage is actually pretty similar to Pied Piper from that show in terms of they're basically like a file compression platform. It's an Airbnb for your data where you can lease out your extra storage space, and it's going to decentralize all of your files and then spread them out over the community, and then pay the users in essentially Ethereum-based tokens. So longer term, they are focusing on basically implementing an entirely decentralized platform where the profitability is made up through the user base. But right now, as they're getting off the ground, they're bringing in, software operators to be able to set up the systems and the infrastructures that they're going to need to be able to essentially go hands off in the future, right?
Yep.
So we brought in a CMO, Rosie Pongrax out of IBM. She was working with IBM Watson and focused on all their blockchain initiatives. And she's kind of come in to help them, I would say, separate themselves as they go after like AWS in terms of the infrastructure side. So yes, like to your question, what we're seeing are companies now, as we're kind of in like the Web 2.5 phase, start off with a centralized, segmentation of their product or of their executive team with the intentions of longer term moving into a decentralized aspect. And then we're also seeing, I think, in sort of like the more frontier aspect, folks that are starting off truly decentralized. I just think that the system and the network and the talent, landscape is not quite ready for that from a recruiting standpoint entirely. So what we're having to do is sort of straddle that line as we work with candidates and kind of saying, hey, look, like you either need to throw everything out the window of what you've learned from recruiting and hiring and decision making and jump into something that you don't necessarily know too much about or hasn't been proven yet, or you can sort of ease your way in with one of these companies that's kind of shifting in. But I mean, I don't know the right answer to it yet. I don't think anybody does, which is definitely, it's definitely something that we're focused on here, like at the firm, right? As we work with all these different companies, what we're trying to do is kind of pick out the ones that are exciting, focus on them, work with them really closely so that we can get a really hands-on perspective on what works, what doesn't work, right? And so from a talent perspective, there's kind of two buckets that we're saying to every crypto company that we're working with. In every pitch that I go on, in every meeting that I go on, it's two things, right? You can go from the proven crypto landscape and you can find somebody that understands the crypto space and has seen success in the crypto space. But the reality is that bucket of that candidate pool is very small, right? You find yourself recruiting out of 15, 20, 25 companies that are specific to the space wherever you're focused on. Like, you're working on a new exchange, you're going to be recruiting out of Kraken and Coinbase and Binance, which are great companies, but there's less of them. Whereas if you're scaling at a breakneck pace, right, and you're a hyper growth company, the other opportunity or the other perspective is, let's bring somebody in that understands hyper growth, and let's bring somebody in that understands how to build and scale at a hyper growth pace, and then they can learn the crypto side of the company. Which the reality is, a lot of people to these days that are in sort of like these hyper growth companies are at least tangentially aware of the crypto world, and they can pick that up. And then it's different across functionality. If you're an engineer, it's a very different ramp up time than if you're a marketer, right? And that's something that we're cognizant of as well as we run through these recruiting cycles. But I do think that what we're finding is a lot more success today, and this will obviously change as this space develops. But today, finding someone who understands how to scale and how to grow and can put in place the scalable infrastructure for a company, as opposed to specifically recruiting out of the crypto space. And I'm excited for that to keep transitioning over time. And it's definitely, we're seeing it in real time happen. But as a search consultant to these companies, we have to be honest with them about giving yourself the best chance for hiring success. And a lot of times that means going after somebody who may not be from the crypto world. I think you mentioned a Chainalysis before. We placed W. Thomas Stanley. He was the CRO at Tanium. He stepped into Chainalysis, and they just raised a monster round yesterday, right? So, and I think you were saying earlier that they're still undervalued. I mean, stuff like that and those success stories are what I think we're really hanging our hat on in terms of that perspective and how we're approaching the market.
No, that makes a lot of sense. And, I think there's two things as well that if I were sitting in your seat, I would be holding on to my chair, holding on tight, is managing expectations. And so I want to kind of hear from you as well as like your thought process of, when you start dealing with executive searches and whatnot, of course, there's a whole diaspora of egos, right? And not only from historical success, perhaps in different industries, but probably from a compensation component as well. So how have you guys as a kind of firm helped try to manage expectations? Because everyone who's coming into crypto expects, all right, in 12 months, I'm going to be very, very wealthy, and it's like a get rich quick scheme. But the reality is it's pretty much only the builders who are developing through bear markets that kind of see the fruits of their labors when things are going well, So how are you managing expectations?
Well, so I actually think that the answer to that is the same answer that I would give for someone that's non-crypto, right? Like the way that we evaluate companies, and honestly, I think that the best way to evaluate companies, because anybody can put a pretty deck together, it's talent, and it's the team, and it's the people that make up that company. And I don't think it's any different for evaluating a crypto company, right? Like you still have the same risk, maybe not as volatile, but you do have risks joining a startup that's going to offer you a typical stock option plan, right? It can go to zero. I think we saw it with Fast, right? Like Stripe came in, they had the best backers in the world, but the team just was overspending, and they weren't necessarily structured the right way. So I think if you put an emphasis around the team building first and foremost, and prioritize that, that's the only way that you can really evaluate a company's potential for success. And I think that applies as well for crypto companies. And I think that's where we can be really successful, not only just as a recruiting firm, but also as we're starting to do our own investments as well. And I'm sure you're seeing it with you guys as well, is making sure that you're doing the due diligence on the team and not just necessarily like the product, because the idea I think can be great, but if you're not surrounding it with the right people, it's not going to work. And so if you can tell the story around why this team makes sense for it to be successful, that's how we're advising candidates to to take that risk.
Yep. No, that makes complete sense. And at least from some of the profiles, public companies that we work with as well, that do some, recruiting at that level as well, some of the feedback that they've received is actually there's been like a huge willingness actually to be working kind of in cahoots with in alignment rather with the firm as to structures that make sense based off milestones and performance like any other industry, right? But in crypto, the KPIs are a little bit less subjective and more on chain and analytical.
Right.
So it's a little bit more clear from that perspective, which can be helpful, or, it can go the complete opposite way, right?
Yeah. Well, I feel like I've been name dropping this whole time. So I'm super curious, like what companies you're excited about. Like, who are you following pretty closely these days?
Yeah, throughout the entire industry, we kind of follow different sprockets depending on where the level of interest lies, right? So in like the play to earn space right now, extremely interesting to see, the Splinterlands team and how everything that they've accomplished. They built their own blockchain essentially, or they used a dormant blockchain that customized it completely for their own usage and scaled it up, and then have an entire kind of suite of IP where as a user, you don't even realize you're using blockchain. And I
Right.
think that is a huge milestone moving forward, is as a user for my customer persona, do I really even need to understand the technology? The hope should be no, right? Like I don't even need to understand. Reality is blockchain and distributed ledgers are literally just databases, right? It's just taking data and binding it through encryption into a chain and then not making it,
Viable, right?
fungible, if you will.
Yeah.
So it's like, it's really, really interesting from that perspective, where the technology already exists. Everyone's familiar with what a database is. It's just the way that it's constructed is slightly different. So when you're interacting with crypto, for example, in a simple use case and kind of proof of concept perspective, gaming is great for that, to test user interface, to test, kind of game theory and different kind of graphic designs, where the barrier to entry is low because you don't need to really know crypto,
Yeah.
and the like. Now, outside of obviously the gaming perspective, I think, we have already spoke about some of the Chainalysis and some of the more, larger brands like Grayscale has done it, and DCG has done a phenomenal job if you start looking at the asset manager space, and same with Bitwise. And Bitwise in the way that they're approaching the space is very, very respectful and admirable. When you start looking at Coinbase and how they've tried to pioneer, the regulatory regime, it's been interesting to kind of see the defense, the defense tactics as anyone who has the dominant market share would take, right? Where it's kind of, we want to show the regulators that we are so much better than everyone else, that the barrier to entry for anyone else is so great that it's insurmountable, and it's kind of domination through, in that instance, legal protection. And I think, hey, it could be, that's kind of, it's an exciting approach to see. You're starting to see corporations take stances at this point. Some other exchanges that have different reputations in terms of their KYC and AML practices, their custody practices, their overall, brand association is not as, let's call it, credible as a Coinbase or a Gemini or a Genesis, right? Those types of firms are obviously very, very reputable and kind of taught after. It's the other end that is kind of being potentially pushed aside or pushed specifically into the decentralized route.
Yeah.
So it's kind of that entire shift for me, and watching the entire space from that perspective is exciting. And then, you would be a fool to not be excited about some of the volatility within the even stablecoin space.
Yeah.
Whether it's this one that collapsed or not, the concept of an algorithmic, stablecoin that is a pricing mechanism on behalf of global currencies is notable and very valuable. You wouldn't have had the Fed chair, or previous Fed chair, Janet Yellen, talking specifically about stablecoins and algorithmic currencies, unless they thought it was a threat, right, to the actual national security and the Federal Reserve and all where that goes into play. So while they're taking shots, it's also kind of a tip of the hat saying, you guys from a retail perspective just built a 40 billion, market cap project when you combine the two. In terms of size, and it was organic and, obviously fueled through venture like everything else is in this space. But nonetheless, things are going to break, right? So I'm excited to see how this plays out, because it's kind of stablecoin wars, and
Yeah.
Stablecoins are like a core foundation of this crypto ecosystem. And so someone's going to be kind of the last man standing over time, I'd imagine. And I mean, maybe there is room for, other market incumbents, but nonetheless, it's been a fun and chaotic
Yeah,
experience to
I mean,
navigate,
yeah, without a doubt. I mean, and then you've also got the other thing to think about, where you've got like, Gemini and BlockFi and companies like that are offering just crazy APR on, holding your stable coin, and now it's depegged, and who knows what's going to happen with all their rates. And obviously BlockFi and Gemini are very structurally sound companies, but now they're going to be, I think, getting held to the fire a little bit just in terms of what they're going to do to their rates. But yeah,
and
look,
not only that, but we're the other, yield bearing platforms,
right.
without necessarily pointing fingers at who's now most susceptible. They all had systemic risk in this, right? And like it was ever present. We know a lot of them personally and whatnot, and they're all taking a hit, and they're all looking at their internal balance sheets saying, do we need to raise capital? What is our liquidity? How are we positioned?
Right.
And so you're going to see, and I think this is actually really relevant to kind of where we are in the market, and as talent's flocking in, if you're considering crypto, like this is the time where people should be looking at this as a crazy opportunity as a builder and saying, this is the time to build, right? When all of the distractions now have gone away, all of the Lambos being dropped off of hotels and conferences and stuff for show, like that's not happening right now.
Yeah.
And that's when you want to start joining the teams, because the people that are still around, the people that are still developing and building, like those are the ones within 3 to 4 years from now, or have actually made a difference, right? And so those teams do exist, and they're very, I would say liquid in perspective of talent moving from one team to the next as alliances are made and friendships born, or all the above. But I'm just excited to see how it plays out.
When you meet with those teams, what kind of questions are you asking those founders to evaluate the builders, right? Like how are you evaluating these newer companies?
Yeah, so post launch, it's a lot easier because you can start looking at historical development cycles and bugs and how you've responded to various critical issues and things of that nature. Pre-launch is obviously you're kind of looking at historicals, you're looking at the team, you're looking at obviously the technical components, right? So I think the way that I go about vetting various opportunities within this space is, first and foremost, from a high level, from a core tenets, do I agree with what this what this company is trying to accomplish? Right now, that may be a perspective of like, hey, we want to do a lending market, and we know that lending probably has market fit here because it's billions of dollars across the industry, right? But the reality is maybe you're going to do it on XYZ chain that no one's heard of, and so like, you have to start thinking of, is this holistically an opportunity that we think has life? You're almost acting as a venture investor if you're coming into an early stage company, right? Because it's a highly concentrated bet on a singular organization. And so you start asking them about their experience that's relevant, as you always do. But as you start going down through, you want to start hearing some battle scars. For anyone who's been in crypto for any period of time that's reasonable, even the last 12 months. Yeah, I have battle scars and bruises, right? They're gonna have the bumps and bruises that they can point back to and say, here was an issue, and here's how I critically thought my way out of that. And it's kind of the problem-solving mindset, right? Is like what we're looking to identify and seeing is, how is this individual as a problem solver? And then of course, who are they surrounded with? You are who you surround yourself with. Both from a friend's perspective and from a professional perspective, personal and professional. Yeah. So like when you look at the top talent, you should see the whole team of folks that have done something impressive, right? Or, and that's not to necessarily put a square peg in a round hole. We're seeing, just to be frank, 14-year-olds launch companies that have better development skills than 95% of the developers that 98% of the developers that you're going to be sending your way. And then blockchain, 99.9%. These guys are 14, and they're, raising millions of dollars just based off of code repositories that they've let out into the ether. And they're saying, hey, we built this tool, we thought it'd be useful. And then people are very excited about it, right? And so, I mean, the age kind of, I would say, There's a huge age discrimination, if you will, because just because these kids are younger and you're seeing 18-year-olds, 20-year-olds do the same thing, doesn't mean that they're less experienced in terms of what they know, which may be in this instance, what I'm kind of most referring to are the engineering situations.
Right.
Of course, executive management on the C level, that's kind of doing more business development or operations, legal, that type of perspective is a different conversation, I would say. But yeah.
Well, I think that's consistent across tech, right? Like the one thing that I've always liked about tech is that the younger people can, become involved in our model. Even here at Daversa, is we hire people really young and develop them internally. And I think that we see that with younger founders and folks that, if you have a good product and if you have good technology, like you can go out and get the funding. But the core point of that, and what's got me most excited about this space, even as we see the markets just like totally implode and the walls come crashing down, is I think like the core tenets of blockchain technology aren't going anywhere. Like whether the price does whatever it wants to do, and it will, the core tenets of the technology are going to be around for the foreseeable future. And so whether that means that Bitcoin becomes the digital standard for gold, I don't know. But I do know that blockchain technology is going to provide a ton of different opportunities and avenues for successful projects to develop.
I agree.
Yeah,
I completely agree.
So I know we've got a bunch of questions here, and I want to make sure that we get to them as well. So Caleb, I see your question. If you're still on, it's storage, STORJ, the pay to earn. I'm sorry, the PDE project that they asked about. Basically, it's like an Airbnb for your data if you've got extra storage capability on your CPU that you can rent out or lease out. And I'm happy to, if you want to ping me on the side, we can talk through it. Why don't we start here with Paul's question? So Warren, let me throw this one over to you. So Paul asked, what will we not know about the size of institutional capital that will come in on the dip? And what does that mean for the notion of DeFi, since the hedge funds may very well take control?
No, that's a very good point. And that has been a strategic strategy, in terms of controlling governance for various hedge funds so that they can control the token economics and make it, self-incentivized. So it's very valid. Now, what I will say is there's a huge bucket of capital on the public side from anything that is fully reporting in the investment banking world, whether or not the mostly are all public, but there's a huge demand for funds that have mandates to be fully reporting and deploying into the crypto space. We're seeing pension funds and endowment funds come in and start asking the traditional asset managers, what's your crypto strategy? And so a lot of those folks end up coming across the desk of folks like us who are saying, where do we get access to deal flow? What are the custody services that we need? How do we set this up, in order to do this internally? And then some of them decide, hey, we probably aren't fit to do this internally and have digital assets on our balance sheet. So they subcontract out through fund of funds and, other asset managers, maybe like ourselves, right? So there's demand from the liquid perspective, there's demand from the underwriting and public perspective. And then I think the most headlines that we're seeing right now are in the venture space, right? We're seeing, A16Z doing $2-3 billion funds. We're seeing FTX raising billions of dollars, right? Within 3 or 4 years, I think they raised that. I don't know what their high was. I want to say it was 60 or 32. I might be getting the rounds mixed up, but nonetheless, they're only around 4 years old, so like venture fuels that growth, and they were hyper profitable as well. But nonetheless, like that is how they start scaling subsidiaries and all the above. So I think, there's going to be a huge emerging industry of kind of distressed projects that are like, so not on the liquid side, that's kind of on the, let's call it market neutral arbitrage and lending fund like we are, right? The venture strategy, we're seeing a bunch of interest just because people look at crypto and they say, we want to have a toe dipped in the sand and play cowboy too. So if we're going to dip our toe in the sand, instead of buying 1% of our balance sheet in Bitcoin, we're going to put 0.5% into these venture funds, and we're going to see, if we can outperform. The other approach is for like corporate treasuries is to start doing, yield farming and these type of DeFi activities that we're seeing come in. I mean, before this Terra stablecoin launched, depegged, there's a custody provider called Fireblocks. We use them internally. They're amazing, great service provider in the industry. They recently launched access to this blockchain Terra, and within the first week, it was almost $1 billion of institutional inflows. Now, keep in mind, these are all institutional, clients that are working on these platforms. Then a week, $1 billion kind of fled from traditional assets that were maybe, in different strategies, but into, this stable coin. And so, the money flow is coming in. We're seeing retail flow out, right? Because when you look at the fear and greed index, when others are fearful, typically retail is running and Wall Street is stepping in and picking up the pieces. And that's what we're seeing here right now, is kind of a consortium of Wall Street parties. The first one was kind of the attacker, the malicious actor in this event. And now now there's a whole community of, heroes that are kind of stepping in and pledging billions of dollars of assets to retain this type of peg. And, so we'll see if it's good versus evil who wins in the long run, if you will. But I don't know how we got there, but I'm rambling.
Do you think that this kind of shift in terms of the investment that we're seeing is a fundamental shift in VC strategy, or is it more a question of just increasing the allocation amounts?
I would definitely, I'm saying that, seeing personally that people are leaning into what's working, and they're starting to see down rounds, so that people are better capitalized, and people are willing in some instances to give up more tokens and equities so they can have more powder when the dust settles and the opportunity kind of comes back, right? And so I think that average check size is definitely getting significantly larger. The average fund and fundraise is getting significantly larger. Before, if you were raising a $50 to $100 million venture fund, you were kind of, a larger participant from anywhere between, I would say, 2018 to 2019 or 2017. You're raising 50 to 100 million to deploy into crypto. You were a rather big fish. Now you're adding zeros behind that, right? Per entity. And so obviously the orders of magnitude have gone significantly higher, and most of these funds all have a mandate to deploy over 3 years, right? And so 3 to 5 years. And so that capital that's just been raised in the last year or so is now when, you would expect them to be actively deploying that, not when valuations are already extraordinarily frothy, unless you're an asset manager that's chasing, right? But nonetheless, like here, I think you're going to start seeing the venture funds lean into the assets that they do have to deploy, and then start so that they can raise their subsequent round, because I think they're going to start getting markups faster than they would historically. And so as a fund manager, right, you are incentivized to deploy as much early as you can to get faster markups so that they can obviously deploy their next fund. So it's that whole game, that you're seeing.
Okay. So we have another question from Pat Corcoran here, and he says that you touched on 2 distinct forms of investment in private crypto companies. Would love your perspectives on the trend of how active larger at-scale companies in the space are operating in these startup deals like Coinbase and FTX and Consensus and Kraken. And I can quickly go there, Warren. I think like we touched on this a little bit in terms of like corporate acceptance of the crypto space, and I think we're seeing that obviously with like Tesla and their approach into Dogecoin and Bitcoin, and even with like MicroStrategy and Michael Saylor, like literally taking out loans against the stock in order to buy more Bitcoin, and probably getting crushed in hell. Right. Yeah. But I think it's a good thing. Obviously, that may not have panned out well in the short term for MicroStrategy, even though I think it did help their earnings calls. But I think as more and more corporate interests increase within the crypto space, and more companies take steps to invest, it can only be a good thing. And I think that what we're going to see, and this is kind of why I asked the fundamental shift question to you, Warren, on the VC stuff, is because I think a lot of companies like A16Z are trying to establish themselves as the forefront investors within VC. I don't think it's necessarily happened yet, because there's only been, a handful of like true winners. And so
Right.
as these companies like Coinbase Ventures, and like Consensus go in and make these big bets, I think that ecosystem will start to sort of develop itself, and then we'll start to see who the real winners are, not just from a company standpoint, but from an investor standpoint as well. And so who knows, like Coinbase Ventures may not be just an offshoot of Coinbase in the next 10 years, right? It could
That may be a competitive asset manager,
totally.
and I wholeheartedly agree, because they're in control of the flywheel. And
Right.
Personally, I'm a huge FTX guy, right? And so like FTX Ventures, I'm just gonna use this as an example, because I think in terms of a KPI perspective, if you were to point to one party being on a track way of sustainable and more continued innovative success, I would point towards FTX. And their venture approach is, the entire flywheel. They bring them in from an initial early stage. They're going to come in, they incubate them, they provide technology resources, they provide industry expertise, and then from there, if you're like a specific NFT project, they have a listing platform where they're starting to do a whole bunch of listings and launches of NFTs. Which is interesting to see. And then obviously from an exchange perspective, like they list them, some of their assets very early on, the ones that they get into the venture deals. And that's kind of what you're seeing across Coinbase as well, is Coinbase will get into these deals, seed them very early, put them on the fast track to their listing, and then obviously realize a very large multiple on their investment once they bring them through that manufactured process. I think that's going to come under scrutiny, certainly, because that's not sustainable. And we're already starting to see that, where before, if you were listed on Coinbase, it was a 50, 60%, sometimes hundreds of a percent jump in terms of that listing catalyst and announcement. Now, something gets listed on Coinbase, it's almost to sell the news events. The employees have almost front run the entire thing along the way so much that everyone in the world knows that this is going to get listed. And so it's like a sell the event when the liquidity comes. And that's, I don't think, the pathway forward, but I think the continual incubation, access to capital, in from like the flywheel perspective is definitely where you're going to start seeing the largest asset managers, emerge. And then from there, you're going to start to see consolidation of traditional financial services companies, trust companies, custodians, right? You start looking at money service providers, anything with an MSB license, those types of, or money transmitter licenses, excuse me. Those types of businesses are going to be acquired by crypto companies because they're going to need that flexibility to operate within the industry. So it's going to go through the whole venture flywheel.
Yeah, I think that the venture flywheel is the right way to put it. So we have, I think, time for one more question here. I like this question. It's a little bit more broad. And so Nicole asked just basically kind of, who we're following to keep up with the news, right? Like what Twitter profiles, what podcasts, where can people absorb their information? And I mentioned, like, I think Twitter is the best way to kind of keep up with this because there's so much going on and it's happening so quickly. But I like the Pomp podcast a lot. I really like Chris Dixon from A16Z and all the content that he puts out, both on his blog and also whether he's on, a call-in or whether he's doing his own podcast within A16Z. But I think there's a guy at Red Point, Tomas Tungus. I think he's a managing director there. And I think his perspective on this, he's not just like a Bitcoin maximalist, right? Like he will give really well thought out opinions and responses to issues, and he'll look at both sides of it. And his blog, he posted on the Red Point page as well, I think is really, really strong. And it also gives a ton of background information into where he's getting that information as well. So you can sort of use it as a good starting point to dovetail off. But I found those to be, aside from just kind of following the players in the venture space that are tweeting about crypto and then whatever else they're investing in, I think like those are kind of like my starting points. I don't know we're interested to hear where you're
Yeah, I would say it's a fun game to try to funnel all of the noise in crypto into something palatable,
centralize
and the digestible, right? There's so much information out there. And I'd say like from a primary sources perspective, if something's going awry, then yeah, most firms are looking at Twitter for like, crisis management and communications of a hack or whatever it may be. Or, hey, we're doing a product launch and promo. The primary communication channels are, from a public perspective, going to be from like a Twitter. But nonetheless, when you're looking at the collectives that are operating amongst themselves, you're really starting to see a lot of the very technical crypto native group move into Discord and Telegram servers. But not just, it sounds kind of sleazy, but the real reason behind this is because they're doing it with token permission access. So you either own a specific token or you own an NFT, and that allows you to kind of come in and get access to this community. So it kind of reduces some of the noise from that perspective. Yeah. But as a whole, I would say like Twitter is a great way for kind of getting the barrage at you from the entire ecosystem. You're going to find your rabbit hole that you go down. And then for me, the rabbit holes that we're going down are like the Medium pages and Git books and development documentation as well. But, just because you'll find something that's interesting, and because it's not just a financial service product or a blockchain-based gaming company, but it could be a, transaction monitoring company that gets you excited, and whatever gets you excited is what you should continually go down, from that perspective.
Well, so we're at time. We are losing viewers like flies here. So I want to obviously send a huge thank you to you, Warren, and the team at TechMeetsTrader. Huge thank you to the team at Hunt Scanlon Media as well. And then huge, biggest thank you to everyone who came and posted questions and was here for the ride. So feel free to follow up with us afterwards. But Warren, it was great getting the chance to talk to you, and thanks for carving out the time, man. This is really fun.
Likewise, Sean. Looking forward to grabbing some beers, and thank you, Daversa Partners and Hunt Scanlon, for having us. I really appreciate the time, and it was an honor to be hosted with you guys today.
All right. Well, I'll talk to you soon, Warren, and thanks everyone.
Thanks, guys.